Welcome to the Market Moment. My name is Matt Walters, here with the one and only Eli Freeman and the one and only Lee Mackey. Excited to jump into today's topics, but before we get started, remember you can join the Growing Market Moment online community by hitting the subscribe button. And we appreciate all the comments and likes. So give us a thumbs up and a comment, and we'll be sure to try to address those in the future. So jumping in, topic one. Is the market actually broadening out, or is big tech still driving all of the gains? So to kind of set this up, because I was the one that tossed this one out here, we finally saw some market breadth going in through the fourth quarter of last year, going into the end of the year, and we were all like, thank goodness, like something other than big tech is like starting to do well. And then you just kind of assume that's maybe continuing, and you look up and you're like, well, snap, big tech's doing it all again. And so when you look at like year to date, big tech seems to be kind of the driving force once again. Not that there aren't other parts of the market that are not decently, positive, but thoughts on that?
You know, the answer to your question, is the market actually broadening out, or is big tech still driving? I think the answer is yes to both.
Yeah.
I mean, the market is more.
It's more broad than last year.
It's more broad than last year. We've seen that in the number of S&P 500 stocks that are outperforming the indice or the index. But yet, tech, again, led by just a few names, continues to plow forward.
Yeah.
So I think both can be correct.
So you've got information technology and communication services make up right at or just a smidge under 40% of the S&P 500. Communication services, like Netflix, Meta, Alphabet's in there. Eli, what you got?
Zoe, I put a link in the podcast notes. Just throw that on the YouTube channel. If you look at the chart, so this is from Fidelity. It's sector performance, and it's got year to date, 1 year, 5 year, 10 year. You just look at information technology and then communication services, and look at year to date. So the market's up. I think it's right around 10% year to date.
Give or take.
You can probably.
When you say the market, what are you talking about?
S&P. It's up 10.7. It's on this chart. So it's up 10.7%. Information technology is up 18%, and communication services is up 21%. So if you say between those two sectors, they make up 40% of the market, and they're up more than the market, then if we're answering your question, is tech driving the market? The answer is yes, because it makes up the most of the market, and it's outperformed the market.
So go ahead, finish that.
But the cool part about this is, if we were at this time last year, and you looked at this chart, I don't know it specifically, but I can make a pretty good guess that information technology and communication services were roaring or doing really well, and the other sectors were negative or pretty close to negative. About the middle of last year, that's how it looked.
Yeah.
So this chart looks
it's
way
better. And that goes back to your point. Like, yes, like it's a little bit more broadened out, but so looking at fourth quarter of last year, you look at SPY and the equal weight. We looked at this a lot a while back. They were dead even in the fourth quarter of last year.
Yeah.
Okay. You look at the 2 year to date. The S&P is up 10.7. The equal weight's up 4.
Yeah.
So you've started to see that divergence again, where big tech has outperformed and the equal weight is not keeping up.
The overall market is, the returns have been somewhat more muted this year than this time last year. I think first half of last year, the NASDAQ was up 20. It 20 plus. And I think the NASDAQ and, like you said, the S&P this year so far are up in the 10% range as of yesterday. Would you like to know what the third rank sector is year to date? Communication services is first, information technology number 2. What do you think the third best performing sector is this year?
Well, hold on, I'm trying to find it. I had it right here.
You're cheating.
I
would not have expected this.
Utilities?
Yep.
Oh, yeah.
Utilities. Solid double digits.
Why is that? Utilities are up.
Some people
Just flood to more quality?
Probably.
And they talk about this. There's a lot of people, and I don't know how much I believe this, and you're about to realize how little I know about it by what I'm about to say. But I've heard a lot of people are trying to make the AI play in different sectors, in like the utility space, and how AI is going to revolutionize and help them become so much more efficient.
I've heard a lot of managers who are they're kind of giving up on the NVIDIA, trying to catch it. What they're trying to do is play it in some of these obscure.
How it plays out.
Yeah.
You're not just buying. I was trying to find. I had a chart of, it was semiconductor sales overlaid against the S&P 500. I cannot find it.
You know,
but it was basically, the chart was like
Yeah.
identical.
Yeah.
I mean,
Yeah.
That's awesome.
But yeah, I mean, utilities,
It's a little bit of a chart
which you would
crime, but
consider
I'll take it.
a very boring sector, high dividend. But yeah, up 15%.
Well, and we saw so much outflows to utilities when tech started doing well, rates started rising, and people started getting
Sure.
out of the yield that they wanted from utilities,
Sure.
and they could go get it with treasuries. But I don't know how you could get a flow to utilities specifically, like short term for AI. That has to be a long term play.
Yeah. Yeah.
so this is tech stocks versus the S&P 500 going back over the last 5 years. This is like a week old. So the year to date says 11.1, which it's like 10.7 now. But 2019, 44.5 for tech stocks, 31.5 for S&P, 37.6 and 18 in 2020. 2021, they were almost even at 30%. 2022, tech stocks were down 31%. S&P was down 18. Last year, tech stocks were up 57.4. The S&P's up 26, and this year they're up 18. The S&P's up 11. So I mean, they got hammered in 22, and the things were pretty flat in 21. But other than that, you've seen some pretty drastic outperformance.
Sure, almost doubling
Yeah.
the underlying market.
So, thoughts for the second half of this year? What do you? I mean,
Before we go into thoughts, I do have something to say about utilities. I'm still upset.
Have yours been turned off?
No, I need AI to make it into utilities out at the land that we bought, because right now, if I put water in, I'm gonna have to write a physical check and mail it to the water utility company.
we have to do that because they charge our water company. This is great.
Come on,
I'm
AI.
actually glad we're
Come on,
talking
AI.
about this. So our water utility company, whatever, they charge like 5% to like auto draft it, and
Are
I'm
you
like,
kidding?
They're like, American Express charges us 0.75%, so we're gonna charge them.
I'm like, heck no. So Haley pays one bill every month, and it's a physical check to Tawnytown Water Utilities or whatever, and we mail it in. That's the only reason we even need
I'm surprised
stamps.
you don't just drive up there and put it in the little drive-through.
Goodness gracious.
But every month I'm like, guys, it's 2024.
Okay, so I'm
Interesting.
long utilities for the purpose of technology can only get better.
Only get
I'm
better
long.
from here.
I'm
Yeah.
long.
That is very true.
You asked the question. We're rolling into month number 6. We're almost halfway. There's the summer I could see just being very benign. Traders take vacations. Summertime is typically weaker. You got an election in November, even though we all know up here at the table that it doesn't really affect the markets, but we know it affects psyche. I don't know. I'm typically the optimist. It wouldn't surprise me if we're sitting pretty close to where we finished the year. I think there's more room to go.
Yeah.
It's hard.
The
It's
Fed's
hard
on the sideline. We know that.
It's hard to see like, hey, we're going to see a 15 to 20% move up in the second half of the year. Not saying it couldn't happen. It very easily could, but
I don't see it.
That'd be 20% back-to-back years.
Yeah.
it'd be more, yeah.
Could we finish the year up another 5-7%? Sure. But again, there's no real impetus for a big move up. I think there's more risk on the downside.
Do you think Nvidia could sell off in the market?
Sure.
I think the market hold up okay. And I say the market, obviously the S&P would be impacted just because of the way it's, but if you start to look at the actual stocks in the
Not
market,
the S&P return, but the rest of the stocks.
yeah, like the rest of the actual market.
Yes, I do. Do we think they could sell off and the rest of the market be okay?
Hold up okay.
And we've kind of seen that in some of some
I
of
mean,
their
you'd have
volatile trading days.
your there would be companies that would be impacted, but I think the market could hold up. Looking at year to date, so we're talking about how the market's had a pretty good start to the year, the S&P. Well,
Best May in 15 years.
when you throw, the best May in 15 years. When you throw Nvidia on the chart, the S&P line looks flat because Nvidia's up 132%
Yeah.
year to date.
So yeah, I think they could sell off and the market still hold up. I mean, I think that just like we saw it last week, I think that a sell off in Nvidia, the money would probably go somewhere else, into other companies.
And
Back to
here's
money market.
and just a reminder for investors out there, Nvidia's up over 3,300% in the last 5 years. So to think that a 50% pullback is outside of the realm of possibility is it's still that's fine.
I mean, it
hurt. There's some short-term pain in that, but a 30, 40, 50% Nvidia pullback would be normal.
If they fell 30, 40%, they're back to where they started the year. I mean, that's how much
I know. That's what I'm saying. Is that is fine.
It is.
It doesn't need to cause panic if Nvidia drops 50%.
It used to be, and I think there's still some truth to it, where Apple kind of determines the market. A lot of people feel like that because Apple is such a core holding across the board. For the last year and a half, Apple's done nothing, but all of a sudden,
Apple's flat.
Apple is, but it's begun to kind of get its legs underneath them. If Apple gets into the AI game,
Because Tim Cook finally said AI.
absolutely,
And that's what
it's
everybody's
true.
waiting.
It's true.
Here's a fun statistic. So you guys know I'm on finance Twitter, and Ryan Dietrich is one of my favorite for just creating charts that are easy to read, easy to understand. He did one looking at the 10 best monthly returns in May. So we just had one of the 10 best monthly returns in May. What does the end of the year look like? And we can put this in the YouTube channel.
Yeah.
But the average return after that is 10%.
Yeah.
So after the best May, the average return is 10%. Now, there's some pretty big disparity if you look at the average return, depending on which year you're looking at. 3 of the 10 were negative. So 7 of the 10 were positive.
And they were minus 40, minus
Yeah.
-1, -2, -8.
Okay.
So, not
So historically speaking, it's
a good thing.
good May. Ride it out. Stay invested.
Yeah.
As always.
Absolutely.
Wait, are you saying just stay invested?
Yeah.
I
Stay
like
invested.
it. I like it.
Okay, recession or continued inflation. Neil Kashkari, president of the Federal Reserve Bank of Minnesota, has been very vocal in the past few weeks about the Fed. Recently said U.S. consumers are so fed up with rising prices that they would rather see the economy shrink than watch costs go higher. He doesn't think a cut is coming anytime soon. Many have been hoping for Fed cuts that would have started by now, but some are speculating rates will be hiked up instead. Inflation has been stagnant at 3.4% since April, same as it was in December. Whatever methods the Fed is using don't seem to be moving the needle much at all. And there's a lot of commentary here that I'll kind of keep looking through. But initial thoughts, I mean, what do you think the Fed, where are we at from a inflation, economic perspective, and where do you think the Fed goes in the next 6 months?
I've heard there has been some talk. What you said, that there are some people out there that would rather the economy begin to shrink. Inflation is beginning to wear on a lot of people. There's really no signs of it easing. I mean, yeah, there are pockets.
Walmart came out in their earnings call saying that I forget all the data and the numbers, but saying that they were actually starting to bring quite a bit of prices down on select goods and stuff, and so it's encouraging.
And some of the other Dollar General or Family Dollar, one of them indicated that they were doing the same.
I know they're pushing back a lot just from what I've heard from friends that work for Walmart, from clients that work for Walmart. They're pushing back on the pricing power that the retailers are trying to. For a while there, they let the retailers get away with a lot of pricing power because of inflation, but now they're really holding them to a standard because we need prices to stay fairly steady. And they can rise a little bit, but at this point, they need to be steady.
I mean, Kashkar is right. There's no reason for a rate cut right now. there's not going to be a rate increase, but there's probably more evidence to support that than a cut.
Yeah.
Even though neither will happen. He goes on in some of the comments we have that he kind of dispels the rumor that 3% will become the new normal, which I've kind of been on here talking that you could kind of see that. But then he does make a good point. Then the next time we have high inflation, what do we do then? Is 4 the new normal? I mean, and I kind of get that. It's going to be awfully hard to get down to 2.
Yeah. Here's an interesting one. Inflation up 18% since February of 2020. Both employee compensation, so what people make, and disposable income, what they make over what they have to spend, up 24 and 25% respectively. So inflation's up 18, employee comp 24, disposable up 25.
Coincidence? No, there's not. I mean that they drive each other, and so and then you throw in the money supply and.
The cool part about that, the next chart, and we'll throw these charts on the screen on the YouTube. The next chart shows non-managerial versus managerial, and most of the growth has come from non-managerial roles. So it's people. The argument isn't the upper class is the reason that this chart is starting to really skew. It's the people that are in that minimum wage jobs, the hourly, not non-salary positions that are starting to see increases.
Yeah.
What do you think?
Well, I mean, I think we have to be careful, like hoping for lower rates, right? Because sure, could we, could you want them to come down a little bit, 50 basis points, 100 basis points? Sure, but to just low rates should mean that like they're low because we need help stimulating the economy, or like things aren't growing naturally on their own, and so we're trying to like help that along. So like the idea of hoping for really low rates. I don't know if that's what we should be hoping for. And if we've talked about it on here before, but if you just look at where rates are at today, they're a little high, but they're not that high historically speaking, just on the average. And so I get give us a little bit of a breather, bring rates down 50 basis points. Beyond that, it's like, be careful what you wish for, because if they go much lower than that, it's probably because things have come to a grinding halt.
Well, I tell clients either two things have happened. The economy has fallen off a cliff, or some external fact or external event has happened.
Everyone has to accept the fact that we went through a very unhealthy, unnecessary, low-rate environment for way too long.
Absolutely.
Like, it wasn't needed. It was great. We all benefited from it. But they should have increased rates years ago. And they didn't. But this is kind of normal. Right. Yeah. And so it's like recency bias. We all are victims and guilty of.
I mean, you figure low rates for 15 years, 20 years. Mm-hmm. I mean, if you're 35, if you're 35
tomorrow, actually, thanks.
Happy birthday.
Yeah.
I mean, since your 15th birthday, 16th birthday, your rates have been like this. I mean, no one or most people don't think of mortgages at 7% and 8%, and that wasn't that long ago.
Right.
My first house was 8%, and the bankers at that time were like, "You're getting a great deal. Hasn't been this low in years."
And you hear the examples of like people that bought homes in the 70s and rates that were so high. That's the outlier.
My mortgage was 18%.
Yeah, that's the outlier. But here's the thing: the people kind of like myself, fortunate enough, like that have a rate that starts with a 2, that should be just as much of an outlier as like the 16, 17, 18.
Sure.
Yeah. It should not be like, hey, that's where we need to be shooting for. The 5-6% mortgage, which I know we're not there. Again, I know like a little bit of help would be great, but just be careful what you wish for.
Exactly.
Because good average rates mean, in my opinion, things are probably pretty good and the economy's growing.
And I do think inflation can come down without another Fed hike. It will just take time. It will just take time.
Yeah. Agreed. Okay. Last topic. So teens are seeing opportunities as declining employment trends reverses. So San Diego State University psychology professor says teen employment is up. Teens are seeing opportunities in the labor market due to labor shortages, and they're filling the roles where qualified. Labor participation for 16 to 19-year-olds reached the 14-year high in March at a rate of 38.2%. This is not as high as it once was in the 80s and 90s, which it got to as high as 60%, but it's up. So Gen Z taking longer to do adult things, including going out of the house and dating and drinking alcohol, and that includes having a job. She stressed the importance of teens experiencing a paying job so that they're more prepared for adulthood, and college is a good thing. I don't really have a whole lot here, but other than saying like, hey, the young people are out there. All these, Zoe mentioned it yesterday, like all these jobs that job postings that we've been seeing at restaurants and car washes and wherever it may be, are getting filled. I think people are starting to get out there. The younger workers are getting out there.
I agree. And as the only panel person here that has kids in this demographic, it's true. They are much later in doing anything adult wise.
Mm-hmm.
And I don't know if that's necessarily a negative, but you see it as much as, for simple things like driving. When I was 14, I could get my permit. When I was 16, had the car and I was driving on day one. Now, I have several friends whose kids turn 16 and they don't even have their permit yet because it's like, why?
Mom will take me.
Mom will take, absolutely.
Yeah.
And then it goes into summer jobs. When you were 16 years old,
I was I was working at 13 and 14 just in the summer,
and now it's kind of like
mowing yards and
maybe
stuff.
Exactly. And so things have drastically changed. I don't know what to attribute it to, but it's good to see it kind of going back the other way. And there are a lot of jobs out there for sure.
Yeah, yeah.
You go to any restaurant, any store, there's a need. There's a shortage.
You look at any yard and the grass is still growing.
Yeah.
Yeah, exactly.
Well,
exactly.
John mentioned this a while back, talking about how like minimum wage and these jobs are designed for these kids,
Yeah.
and it is. We got pushback on it, but it is.
Yeah.
John's right. Y'all aren't going there. Okay.
Mark,
Silence.
mark the tape.
I like it when the comments aren't coming at me.
Cricket. Yeah, it's kind of fun. All right. So on our latest short video, NVIDIA just keeps going up. Will it ever stop? Referencing last week's topic on NVIDIA's continued growth. Someone commented, "Welp, that's a sign to start shorting."
When?
Is it a good idea to short a company that is putting out a desired product and continuing to grow? So
Short term,
people have lost
maybe.
a lot of money shorting NVIDIA over the last
Oh my gosh.
5, 6, 7, 8
Sure.
years,
Mm-hmm.
right? So, I just wouldn't waste my time. There's gonna be the lucky few that either ride it out
Sure.
or get lucky and time it where when it does roll over and fall 50%, they'll make a few bucks. But
A lot of people go out and watch Big Short and think you can just buy a short.
Yeah.
Shorts expire.
well, and how many times has Michael Burry made predictions
Oh my
over the last?
gosh.
Those
If you took Michael Burry's advice from The Big Short, on what he's been putting out into the
Yeah.
media, you'd be dead broke.
Yeah, and could he be right again eventually? Yeah, but like how many times are those guys wrong before they're eventually right once?
A broken clock is right twice a day.
Yeah.
That's you kind of gotta have to. Keep
So that's
that
a tough
in mind.
game. We would not recommend going out and shorting NVIDIA, which probably means it's about to crash. But any parting comments?
No, summer's begun.
Summer has begun.
Can't really tell it with all the rain we've had.
Goodness
It's been
gracious.
pretty dreary.
It
but,
has been.
Well, as always, we appreciate you guys listening and watching the podcast. Be sure to leave us a comment, like, subscribe, join the Mach 1 community online, and we'll see you next week.